as well. Lastly, the refinance limit has been reduced to 80% loan to value. So this is pretty cut and dry. We're coming from a time where it used to be 90%. Just last year, or in the last 18 months, we were able to do a refi for 90%. So today we're capped at 80%. And again, depending on which region you are in the country, the appraisal and the market value comes into play. And in many cases, clients aren't able to refinance. In fact, their mortgages can be worth more than the market value. So this is a reality in some parts of the country. There is a strategy to squeeze out an extra 5%, and it's via utilizing a cashback mortgages. Of course, there's a price for that. The rate premium is an increase of anywhere from 0.8% all the way to 2.5%. Okay, so those are the 5 points that I wanted to discuss this evening, and just quickly skim through them. So here are some common remedies that we're seeing quite often. It's becoming the norm for people to have a co-signer on standby. And by the way, when you do have a co-signer, they can come off the mortgage as soon as a week after we close it, provided that the applicant can qualify on their own. So for example, a young student out of school that just got a job making $60,000 a year, has mom or dad on the application to qualify. Say 2 or 3 years later, the student now, or the young individual now makes $75,000. So at that point, we just call the lender and requalify and remove the parent from the deal, and Bob's your uncle. Another common remedy: 5-year fixed or bust. So we're seeing very limited access to other products here simply because of those qualifying rates that we spoke about earlier. So 5 years fixed for that reason primarily seems to be the choice. But it isn't a bad thing where you can, when you consider where the rates are today. So we are still at historical emergency rate offerings. You can still get 5-year fixed rates as low as 3.09%, sometimes even lower if you have a quicker closing rate for your deal as well. B lending or alternative lending, we're seeing quite a bit of this as a plan B coming into effect. And expectations in education, really, this is the biggest one right now. The biggest focus when we do our work is explaining to people reasons for decline, or reasons for not being able to get approved for a home equity line of credit or a variable rate mortgage. So we found that the rules have been quite overwhelming for mortgage industry professionals, never mind the general public. So we see that as long as people know what the rules are, and they can gauge their expectations accordingly, we're finding a lot of reasonability on both sides, from the consumer perspective as well as the lenders. And of course, it makes our jobs a lot easier as well. I think a lot of people, when these rules came out, quite frankly, were shocked. And they really didn't understand the rules until it was time to qualify for a mortgage. So that is our intent with these 10-minute webinars. We'd like to keep them going every second Wednesday of every month, and we just want to get out there and give our piece back to the general public in nice short little 10-minute pieces, and really focus around education and where the mortgage industry is going and where it's at currently. So I'll leave it at that. If you want, or if anyone has any questions, just please go ahead and use the chat bar, and I see there are some. So let me get to them here. Okay, so for self-employed income, is there any way to qualify them if they have a business under 2 years, say 1 year and 4 months only, but they're performing well? Yeah, that's a great question. There's definitely a way around that. And in one example, I'll go back to the example of the self-contracted engineer downtown Calgary. So say, for example, that engineer was on the payroll for Shell before becoming self-employed, where they were earning a salary. And what they've done is they've just basically transisted their pay structure from being a salaried employee with Shell to a contractor to Shell. So in that event, There are exceptions where you can be 1 year self-employed because you come from 3 or 4 years prior to that working salaried in the same profession and the same job role. So I hope that made sense. But if you're coming from, let's say, you're working a clerical job for 3 years, making about $40,000 a year, and then all of a sudden you're going to sell donuts. Okay, clearly that is you're switching from one profession and job role to clearly another one, and you definitely require 2 years. Okay, and any other questions? Oh, I do see one other come up here. Just bear with me. Okay. Someone wanted to know, what is the rate for a 10-year fixed mortgage these days? Right now we have a promo going on at 3.89%. So not a bad strategy to consider signing up for a 10-year fixed. And we do also have 2 and 3 year fixed mortgages as low as 2.69 and 2.89%. So some really good rate offerings out there. Okay. And I see we have one more question in here. 1 second, please. Yeah, there is a promo for a 5-year fixed available at 2.99%. And yes, that is available, and it is a 5-year fixed. That is correct. Was that other question? Just keep online here for another minute or so. Okay. So I think that's it for now. So if anyone has any further questions, or if something comes up later on this evening, please just email or contact the person that sent you this link, the Mortgage Center mortgage associate, and they'll get back to you within the evening or first thing tomorrow morning. So thank you all for joining us this evening, our very first client webinar. And yeah, keep looking on Making Sense, the next issue for the next webinar. Hope you all have a good evening. Take care.